I want to review this sequence here for just getting the reps in, right? I'm just taking free throws here in practice, and the more videos I make like this, and the more times I review them, the less likely I am to make that mistake again. Um, so just to recap on today, January 20th, we are opening up with a significant gap from prior day. Uh, so this is Monday, which was a holiday. I'm not really counting that, but we have a big gap, about 80 points down, 80 or 90 points, I can't remember. So we're opening up double distribution in the overnight, not super relevant, but the context on the day was, are we going to fill the gap or not? So you can see here at the open, we've got a very confident open to the upside, but then B period comes down and takes out A period low. So, walking you through my thought process on that, when B period came down and took out A period low, that sort of negates that confident open. You know, in a confident open, what you want to see is follow through. And if we were going to be closing the gap today, one of the things you don't want to see is B period coming down to the open, let alone taking out A period low. I did catch a long though once we took out A period low and B period did not continue lower. I got in, I think around like 80 or 84 or something like that. Ended up taking a win on the trade, but anyway, that's not the sequence I want to go over. So what happened here is you've got B period coming down, basically taking out our chance of one time framing for the remainder of the day or having a trend day. So right off the bat, that just should tell me that we have less odds of a trend day just because of what happened there. When we came back after failing to continue lower, that's where you've got C period. Okay, we're one time framing up. When D period came down and broke C period low, that again gives you more of a short bias, or at least not going long, so short or sideways. Then you have D period unable to break C period high. E period, same thing, unable to break D period high. And then you got the opening of F period. So the sequence I want to replay here is just sort of walking you through my thought process on why I think this is a missed trade and why I think this is a high probability trade moving forward. So I'm going to hit play here. We're just going to see what happens. I'll pause and walk you through what I'm thinking. Real quick over here on the execution chart, this is the 3-minute. What you see here is just lower high, lower low, right? Lower high, lower low. That's not a good sign for longs. And you can see that with what we're seeing here with C, D, and E period. This is C, D, E period, all failing to make a higher high. So when you've got 3 periods like that, especially when you have a lot of overlap, the way you should think about this is D period had a chance to break C period high. E period had a chance to break D period high. When you get close to the high like that and you back off, that is giving you a short bias. It's tough to take a short just because of that, because you need confluence from other areas like the advanced decline, volume, delta, so on. But just the fact that we weren't able to get to the high there and we backed off is just something that you can take forward and pretty much remove the long bias for the day. So if you've been watching my videos, recall I'm the only one that's watching it. So one of the concepts that I've been thinking about would be, price is either going to go up, down, or sideways. There's no fourth direction. And if you can identify things that are happening to remove one of those directions, mainly just the long or the short bias, then you no longer have a 33% chance of a win, right? You've got 50-50. So in this case, you can safely remove the long bias because we had 3 attempts to take it out. We had 3 attempts for the long bias, and we were unable to get to the prior period high. So now you remove the long bias, and that just simply gives us the probability of going sideways or down, right? No fourth direction. So this is the sequence that basically gives you the trigger for the trade. That's one. That's our first data point of unable to break CD E period high. And then also you add in the factors like we had a confident opening, but B period came down, failed, yada, yada, yada. We're gapping down. that is another data point for the shorts. I will show you here. This is the weekly chart and an hourly bar. You can see we've got a fairly confident trend down, and the only way we'd reverse that is if we break above that level and hold. So this is just adding more data points to the sell side, okay, or to the short bias. So let me hit play here. So basically, what I'm looking for in F period is: are we going to break E period high? Are we going to break E period low? And if you watch price action over here, E period low, it's right around VWAP. That's perfect. And VWAP is a very significant level throughout the day. That's something that I've been seeing recently, and just reading about. If hedge funds or big money want price to go up or down on the day, VWAP is usually a level that they're going to have on their screens. Very unlikely they'll have point of control or prior day low, prior day high, maybe some of that stuff, but VWAP is one of those levels you know for certain that big money uses. So right here we're looking, okay, we just broke F or E period low. Again, the fact that we got up to these levels here, the fact that we got up to these highs, or close to the highs and backed off, again, is removing the long bias. So now we switch to the short bias. One of the things that we're looking for is breaking VWAP around that time. So this is 1124. Let me show you what the advanced decline looks like. So 1124 would have been right here. So we're not taking any trades against the advanced decline, or AD, right? It's bullish right here. We're above that zero, that neutral level. I'll explain again what all this is later in another video maybe, but very powerful. And so at 1125, I think like about here, you're still bullish. But the thing is, I don't think I can use this indicator as just to simply, if we're above zero, go long, if we're below zero, go short. There is going to be some nuance where as I continue to use this, I'll get more comfortable with it. But you can clearly see a downtrend here. You can clearly see the fact that unweighted is above the weighted too means this rally or this bullish bias is not as strong, simply because the unweighted is higher. Somewhat of a nuance that maybe I'll explain later. But essentially, so we'll take a look here. We are declining there on AD. We broke VWAP, and we just broke one time framing to the low side. So this is actually where I would potentially get into my trade. And just for shits and giggles, let's go ahead and play this one out. This will be a little bit longer of a video, but who cares? Later in the day, something I did notice as well was, delta and volume, why they are important. And don't take this to the bank quite yet. It's just an observation right now. But delta and volume later in the day are not going to be as usable, or I don't even know how to really say that. It's something that is not going to be as relevant, or maybe you shouldn't lean on that as much later in the day. You want to lean more on the higher time frame context, and then also what's going on with the market profile. Market profile is going to be like 75% of the trade decisions. So the fact that we broke E period low right here, that's a good signal to go low. So yeah, let's hit play, see what happens here. And that trade, honestly, I know price is going lower. I traded today, but that's going to be an early trade. That is pretty risky right when we break one time framing lower, because we did that here in D and C at period, and then here with F breaking E period low. The difference is we didn't get below VWAP very much. Right here, we're actually getting below VWAP. And so a safer entry, if you think about it, would have been probably right here. So let this one develop, increase the speed a little bit. Right, so I don't know, right here maybe. After this big bar, you don't have the most volume right here. This is 180% of usual. And then you've got I guess this is pretty big volume here, but delta's pretty much going nowhere. You can't really, I mean, maybe if I thought about it more, I can figure out what exactly is going on here. But the main thing, again, we're leaning on F period broke E period low, and that's also VWAP. So this is because we removed the long biased here. Uh, it's a good trade essentially. So, and I'm actually going to speed it up. So the weird thing here was you can see delta is increasing. We're getting some weird stuff with delta, very high volume, very high delta, but we're still declining. Again, those are going to be things that really the market profile concepts are going to trump that, especially later in the day. We'll see if that's true over time, but that's just my feeling as of right now. So you see this, look, a lot of high delta, price is not going anywhere. That's almost in your favor, isn't it? If delta is moving up, a price is moving down, that's a divergence, and it could signal absorption or a slew of things. But in this case, it's not necessarily against you. You can see this one right here, this high volume, high delta, and then you got a doji bar. So it's a lot of effort from buyers without much result. This one's a little bit different, but lower volume. So let's just see. I'm just gonna hit play here, and we'll ride this thing out. The other market profile concept we're using today would be price, or I should say value, is developing lower relative to the prior day. Remember, Friday was way up here, but we're developing lower relative to the prior day. And we can hit pause real quick. When you do that and you fail to close the gap, or you fail to overlap with the prior day, it increases your odds for a late day rally or a late day sell-off, depending on which way you're going. Today would have been the late day sell-off. So we tried, this is how you see the day. We tried to go higher and we failed. We had multiple attempts to go higher, getting fairly close to the previous period's high, and we continued to back off. As soon as we broke VWAP, which seemed to be support up until then, that's where it's like you switch your mindset to, okay, we might be having a late day sell-off here. We tried to go higher. All of these longs right here are going to be offsides, and their stops are going to get triggered at some point. Their stop, who knows where their stop's going to be, but you can safely assume it's probably going to be somewhere around here. These short-term traders, when you stack up like this and you have a lot of bar overlap or period overlap, that means we're really crowding the plate for longs. And then also, these are shorter term traders, because if we had big money coming in, big money that doesn't have weak hands, you typically don't see this much overlap. So basically this trade, this late day sell-off, is the idea that all of these longs right here are going to be offsides, and you're just simply taking advantage of that. VWAP would be a decent level, because everybody and their mother has VWAP on their chart. That's going to be a level where you might see a lot of stops get triggered. Okay, so I'm going to continue with this and just let you know what my thought process is for the trade management. We're going lower. We're going lower. If I close this, you can see this is a big old distribution right here. We broke below, creating this gap, and this is now our second distribution. Very, very unlikely that we're going to have 3 distributions in a day. So you can safely assume, unless we close this gap right here, we might be creating a second distribution right here. And then if price continues to fall, don't bank on the idea that a third distribution is going to be created. So overnight low, let's get a poor low here in J period and I period. Let's see what happens. If we don't get elongation after that, I'll lock in one of the contracts. See if we can take out that point of control down there. We took out the point of control, right? I'm gonna see what the distribution looks like. Okay. And let's see what happens when we get the point of control. Question is, are we gonna keep moving? I'm gonna keep going. I'm not really gonna be focusing too much on delta and volume this late in the day. But one thing I will be taking a look at, what are we at here? About 2 o'clock. So at 2 o'clock here, you can see delta was way down, right? That's good. That's what you want to see. That's what you want to see in a trade. But we are getting a little bit long in the tooth, and I don't think we're going to create a third distribution. So let's see what happens here. Having trouble with that point of control. We broke lower. We're breaking lower on high volume, high delta. But we backed off. Starting to see some high delta. Well, I guess not. It's high volume. They're getting pretty long in the day, M period. Honestly, this is probably where I'd take off the trade by 3. I don't know what that is. This is all screwed up because I have something from my script. Anyway, that's where I would have taken the trade off right here. I mean, we're getting really late in the day. How much more could we actually go? In this case, I would be okay if price continued to fall after I locked it in, just because again, the odds that we make a third distribution are pretty low. We might slowly grind down here in M&N period, but I think the odds of that are just much lower. So just to recap, when price broke VWAP right here, that was an aggressive entry. I'd say a better one may have been like maybe right here when we had that big candle. And then you started to see, what you want to see is that elongate. Then you also want to see delta, or not delta, AD go in your favor, just to give you confirmation of that direction. But again, the main idea here was all of these longs right here are going to be offsides at some point, just because you know these are short-term traders because of how much overlap there are in the periods. But each of these short-term traders are going to need to stop out before price moves too far against them, because they can't afford to stay in a losing trade. I mean, if you were long up here and you didn't have a stop loss, I mean, you lost your pants on that trade. So you know the stop loss is going to be somewhere. You just don't know where. VWAP, again, is a very logical level where they would probably have it. And I think this was just proof of that. So anyway, just some nuance there, but make sure you don't miss that trade again.